this is John Kvale, and this is your September. I know it's going fast. We're going into the last quarter here shortly. September Capital Market Financial Planning Review. And those of you that got a kick out of me trying to work the software, of course they had an update. So I'm going to see if I can make this work right the first time so you don't have a blooper. So here we go. Let's see. Here we go. And of course, no. I'm going to move it over. Hopefully that worked out okay. Move it over in the quarter. Got a lot coming at you since it's the end of the quarter, so I'll try and keep this short, but I wanted to remind everybody, we reminded everybody on the official date of our holiday party. It's a couple weeks earlier due to just availability and cost. We hope to see everybody there. And if you get a chance, watch this video. Those of you that are listening, I'm showing the video. We got this from the Perot Museum and, of course, got permission for them to use it. It's 19 seconds, but it shows some cool stuff. And a couple of us are going to go from the office down there to entice you even more and take some pictures and maybe some videos, but we haven't done that yet. So watch for that. But mark November 14th from 6:30 to 9. We have the whole museum, and it should be a lot of fun. All right, now let's move on into our financial planning portion. Those of you that are listening, I have just scrolled down, and I've got a couple of financial planning tips. Want to remind everybody that at 70.5, you have the right to defer your first required minimum distribution. The perils of doing that mean that you will have two in the following year. And I've got the dates of birth between 7/1 and 48 and 6/30 of 49. If your birthdays are in there, then you have a unique decision. You can defer that. But if you do, you may double up. So just think about that. It's not the end of the world. But if you have a large IRA that you're going to need to take a distribution of, it might jump you up a bracket. So if you have a question, just give us a call. All right, those of you that are just in listen-only mode, you have your hands on the wheels. I just scrolled down a little bit. Mortgage rate update. I was surprised when I went back and looked at this post. I had 11 bullets. I asked Donald and Jen to throw me some bones on this as well, and we came up with a whole bunch of them. And it was talking points. Interest rates have gone down. Longer-term interest rates have dropped with the tariff talk. Now, they bounced up a little bit, but I had 11 bullets to think about. It's costly, rightfully so, to refinance your mortgage. There's 11 things to think about. I suggest if those of you that are listening, I'm circling the post. If you are one of our favorite things, if you're not sure if you should refinance, be sure and read the post or give us a call. But the other thing, I have this secret little thing that I stole from somebody on television I heard many years ago, and it's if we like to have an 18-month break even on the cost of your refinance. And if you take nothing else away from that post, what does that mean? That means that your old mortgage cost or your old mortgage payment, your new mortgage payment savings pays for the costs of refinancing in an 18-month period of time. I go into greater detail in the essence of time. I'll let you. This also, by the way, this also made it into the Q4 newsletter. So I want to keep this shorter. Now, interesting. Those of you that are listening only, I'm scrolling down to the capital markets portion. And so, of course, my laptop goes in battery save mode. We're on the road, and it's going to darken a little bit. Hopefully, that won't mess the video up. This is live. Well, no, this is real recording. I could edit this, but likely will not. So, but those of you that are just in listen-only mode, now that my laptop has gone into battery-saving mode and dimmed the background a little bit, we may have to squint, present party included. I go to an inverted yield curve. I had that up on the actual financial planning portion, but I moved it to capital market portion. Talked about it in this post. This also made it in the Q4 newsletter. Definitely in inverted mode. Right after I posted this, it uninverted, but it's been inverted enough to be a pretty good predictor of some type of recession. And I mentioned in this post and also in the newsletter that with such a soft recovery, I find it hard to believe. Anything can happen, but I find it hard to believe that we could have a really ugly recession. So maybe that's hopeful, me being glass half full. I don't think so, but we'll be prepared no matter. Okay, I can't quite squeeze this in here, but the Federal Reserve just a week or so ago lowered by another 25 basis points. Not our favorite thing to do. We like some gunpowder for if we do happen to go into a bad recession, but 25 basis points isn't going to hurt us. It's a little bit, I made kind of fun, those of you that are listening, it's a little bit of gasoline on the coals of the economy. economy is slowing globally. Part of that is due to tariff talk. Part of that is just due to long in this economic cycle. Now, we are getting some interesting bits, just as a side note, of some possible reacceleration, but the Federal Reserve deemed it able to lower rates just a little bit. So that's it. I had a couple of capital market updates. I'm trying to keep this short because I've got a lot coming at you with the newsletter and lots of reading as well. But again, if you get a chance, turn the music up or turn the volume up on this Perot. It's got some cool music as well. Those of you that are listening, I slid all the way back to the beginning of this post to finish at the Perot thing. We hope to see everybody there. Formal invites are going out with a firm RSVP, not super firm, but pretty firm because we've got to get the food ready and everything. It's almost October. This post will go out on Monday, the last day of September, so I'm a little ahead of the game. But hope you enjoyed and have an awesome day. And thank you for listening.